CCN GWSCPE model explained. So we are looking at how we recover losses with the GWSCPE model, and taking a look at the market right now, we can see that on our chart here we have drawn two key levels, all representing, first of all, the correction impulse circle limit and its projection arrow, which is the most recent. And then we also have the most recent trend impulse, circle limit, and its projection arrow. So bringing these two together, we are looking at area on this chart where there will be high volatility. And these are where we take our entries, because there we expect the market not to spend up to 15 minutes before moving into a profit direction. So within the first 15 minutes of engaging with the area, there is expected to be high volatility. So when the market tests an area of high volatility, that is where we want to take our first entry in the direction of our entry projection. So we have done that a number of times. Today, let's look at the trading balance first of all. Trading balance is 5,008. And now we have made a profit of $263. This is about 5% of the balance so far, and the trade confirmation shows that we have made gains consistently. We have made gains consistently down to the very last entry just taken and closed. Now, how we take the entry is what we are defining. So we only take the entries at areas where we expect the market to have strong momentum to move in any direction. For example, the market has gone to engage with a recently broken trend impulse low, or what we will call a trend low. Okay, and let's compare this low with the previous low. This is an equal low. If you look at, okay, no, this is a major low, okay, not a minor low. So which means it's for trend continuation. And in trend continuation, we want to see the price go down. So we'll take the first entry at this point as a sell entry, lot size. Before we take the entry, we are going to look at the price. So we are taking the entry at the key level, which is 3308.42. So that is the entry level for us to take the sell. Then we will now have a buy entry at 3309.42. So here, if the market is at 3309, we will just take the buy from that point, knowing that our main entry will be the sell when the market returns back to 3308.42. So that means we now have an entry projection. We are having a main entry projection at 330.42, and now a converse entry projection at 3309.42. So right now we are ready for our main entry because we have taken our converse entry where price currently is. So price is currently away from our main entry, and you can see we only bought in the direction of price current movement. Why that is not our projection? Our projection is for the price to return down and give us the entry at 330.40. But since price has managed to go above it, we are not going to be calling price down. What price is currently doing is what price wants to do. So we will be in the market with price currently as it is going up. Then we wait for it when it's coming down for us to take our main entry. That way we are losing nothing. We are not waiting in vain. So that is one of the things about this entry. Then while the current entry is moving, you will see price moving towards another flash point, which is an area where price is expected to gain another sort of momentum in either an upward direction or a downward direction. We will close this position in profit, accept the little profit we have seen, and then take a new entry, because from the new point of entry, we are expecting price to have gained new momentum in a new direction, where the more entries we can take, the higher profit we can make. So right now, price is approaching a key point where we would like to take an entry, and let's explain what that point is. Actually, from 3308.88 and above is a point for price to go up. Then when we look at what price has done before, we know that we have an IPL. So this is an IPL at 330.98. That's the IPL based on the correction impulse here. So if we are trading correction, okay, or expansion, then we'll be buying on the correction impulses IPL. So that is what we are currently doing. Now, while the price is going into the expansion phase, okay, or repeating the correction, which is this correction impulse, now repeating the correction, there is a tendency for the price to go and engage with, once again, the projection arrow of the trend impulse. So if that happens, then we are going to have to exit the current position and start placing a new entry at that point. So while that is pending, we know that price is expected to come back down, and we are not worried about our entry currently, because it hasn't gone to any flash point where we want to take multiple entries. So when there is no volatility, we just wait with our entry in the current direction while we watch, because we have to be active to watch when the market gets to an area where we expect to see high volatility. That is how we have traded the entries we took until this point. So every time we take an entry, there is always profit to be made from that entry. So let's look at the current entry we took, because it's approaching a key level. Profit. Okay, so instead of us forcing the market to move in any direction, we rather wait for the market to get to a key level. Okay, take the trade currently at the level the price is. For example, the price has come to a CRO of a trend impulse, and we know what CRO of a trend impulse means. It means the level where the market should reach and decide to correct, okay, or return back into trend. So if the market breaks this level, it means that there is a potential for us. So here we are going to look forward to a sell entry at 3312.78. So we have taken a sell entry. Then we have an opportunity again, because this is still a sell level at 3313.78. We'll take the second sell entry, then we'll double it in our next entry. So we still repeat the entry with the same loss size. Now, the reason why we took the two sell entries here is because this is the level we were waiting for the price to get to and sell. Okay? Because the market breaking this level means it will gain momentum to go to the upside. And that is what we want to see. So this is what we refer to as a flash point, an area of high volatility where for the next 15 minutes, price has to choose a direction from this point. You can see that price haven't got to exactly what we were expecting it to do. It is rejecting the projection arrow, which is the trend projection arrow. So if the price is intending to break the projection arrow, it's going to creating an opportunity for us. That is why we have to secure the entry. So at 3314.52, we will take a buy. So for now, we are only taking this sell because this is the level for sell. Okay, and we are only selling here because this is a volatile level of gain in price. So our trend projection, remember, remains a downtrend, and we know that the upward movement is a correction movement, and correction has a circle limit. We can see here we have a correction impulse, okay, and we have its circle limit at 3325. And one thing we know about correction impulses is they do not always get to their circle limit, because the projection arrow will hold price down. So you can see the projection arrow here has held price down 3 times on 3 attempts of the correction impulse. Okay, projection arrow. When price attempted correction 3 times, it rejected the projection arrow, and that is what brought price to create this new trend impulse. And since this is a major trend impulse in comparison with the previous trend impulse, you can see where the previous trend low was here. Okay, that's 3311.52, and the new trend low is at 3308.40. So this becomes a major trend impulse. So at this level, we are selling because of our entry projection for the trend is a downtrend. And as far as we continue trading this way at key levels where we expect to see high volatility, we can only be making profit, and our profit will keep growing. Okay, so now we are 365 and we are targeting getting to 500, so which will be the first 10% of our account size right now. So at this level, you see we are relaxed because we can just look at the market and have an expectation from the market. So today's market started by creating a sell base, and you can see the sell base at 3337.61. Okay, had the deviation limit at 3340.61, which was what the market, okay, the market hasn't broken it yet. You see the first engagement was a rejection. This was 3340.29, no going to 3340.69 yet. Then the market returned below the day's first sell base to create a buy base at 3331.28, and then with the buy base created 3331.60, its deviation limit is at 3328.60, which if we drew that out, we could see 3328.60, how price engaged and rejected it. So this was the rejection, initial attempt to break, and then market returned back but stayed below the day's buy base. You can see, so showing intent on breaking the buy base, and then returns to break the buy base and its deviation limit, and this is the market having broken the buy base. And now we know our rule for SBL trading, that the candle that opens after the break of the buy base is expected to lead price into a 200 pips downward move if it is a buy base that breaks. So right now a buy base broke, and this is the candle that opens after the break at 3320.62. So where is price expected to get to? First has to get to 3300.62. The price reached there. Let's see, price first got to 3304. Okay, almost there, and went back to retest, okay, the entry level, then returned again below the entry level. Remember, when we have entry here, our SL is at the high of the candle that broke the buy base. So price returned back again, still in profit, okay, and coming to again 06, went up again. So going up now, it has created new correction impulse and trend impulse. Okay, and this, look at this here. This was a minor trend impulse that formed here. Okay, this minor trend impulse already signified that price was expected to correct. Okay, but did the correction happen? It didn't go 100% because this is a minor trend impulse. Price expected to go 100% of the minor trend impulse. Okay, and then correct the major trend impulse, which did not happen, as you can see yet. So because that failed to happen, price came back down. Okay, price came back down and did what? Reached the 3300, which we had projected. So from 33, let's look at it, 3320.45, the market got to 3300.45. You can see that exactly for the first time and rejected, showing that it has completed the first projection for the break of the buy base on the candle that opened after the break of the buy base. Okay, so this has perfected that move. Then here we see the market try to return back up, only to go and retest again the entry level. You can see that at the entry level, and rejected the entry level. So the rejection of the entry level currently now is what came back down to create the IPL of the most recent correction impulse. Okay, and after creating the IPL, price went up in attempt at continuing correction, then rejecting once again the projection arrow of the correction impulse, price returns back down. So right now we are trading a market that is returning back into a correction with a new trend impulse created. And here we see the price reacting to the projection arrow of the trend impulse, for which we had anticipated a sell, and we took sell entries anticipating the rejection. So this was a rejection, and this is a new rejection. So now if price intends to break this projection arrow, it means it has to gain upward momentum. So but if it is not going to gain upward momentum, it has to return back from the main trend impulses projection arrow. You can see, so that shows that we understand the trend and we are willing to continue trading the trend. Meanwhile, we can see here that the first projection for the downtrend has completed when price got to 3300.3. You can see 0.46. And then returning back, it completed that move by getting to 3329.60. So that initial projection was complete. And one more thing, so we are about buying again because we are seeing a potential break. So let's go and get ready. So this is our level now. Our main entry has gone in for potential break of, what are we seeing? Potential break of the level where price is expected to gain momentum if the projection arrow of the trend impulse is broken. And now you see that volatility we are looking for is coming in because price has attempted for the first time to break what? The projection arrow of the trend impulse. And we want to take advantage of that opportunity because this is where price usually gains that momentum to make a power move. So we ride the entire wave of the momentum while correction continues. Now, if this break happens, because this is a new candle that is about breaking, okay, if this break happens as it looks, then we are going to wait for price to get to, let's just stay watching a little while to see if price returns below the entry level. We'll be taking our sell entry again at 3314.56. Let's look at that. So 3314, okay, we'll be taking a sell at 3313.76. So price is currently above that. So while that is happening, if this price continues to show the potential for breaking as it is looking, the projection arrow of this most recent trend impulse, which is a major trend impulse, it indicates possibility of attempting a break, okay, of the impulse start level. And then we will see, in order for that to happen, we'll see the first new engagement at the projection arrow of the correction impulse. That is why we have the two projections here. So we have the two projections here, and now we watch to see which projection actually turns out to dominate price movement. So currently we are watching for where price will settle, and whichever direction price intends to settle, we only have profit to make on this trade. So as price approaches this point, we know what we're expecting next. We're expecting that there will be a gain of momentum, okay, which is from this level. If price gets here, want to see a gain of momentum, okay, In rejecting now, I want to see a power move. Okay, if price returns here, closes with a rejection, which we have a sort of long life for this current candle. So this candle still has about 11 minutes life on it. So it keeps us watching, and we have no action to take, neither can we have any reason to panic or be under tension, because our entry only has a potential for profit and nothing more. As far as price keeps moving up, we can only make profit on this trade. And then we only sell again if price returns to 3313.69. Let's see that exact price. 3316.76, 3313.76 we are going to sell. So until that happens, we are only waiting to see price get to, once again, testing the projection arrow of the most recent correction impulse. And seeing that happen, we are also seeing the potential for a new IPL formation. Okay, yeah, we are seeing the potential for a new IPL formation for a sell entry. So which means that we will be looking at closing this entry in profit when price gets to the projection arrow of this correction impulse. So that is what we are watching out for. So now we understand that the structure the market prints out informs us of the entry decisions we can take using the GWSCPE model. So the first thing for the GWSCPE model is choosing a strategy. And for us to choose a strategy, we have to first of all identify the structure of the market. That's the first thing. Okay. Then we have to secondly recognize entry opportunity. So when we have found the structure of the market, we want to buy or sell, okay, on either any of the nearest key levels where we expect to see high volatility. Okay, and then once we have found an entry opportunity, we are now going to think about protecting our capital. So for first entry opportunity, we want to see how the market will react to our key level. Either a break or a rejection of the key level will inform us of the kind of entry to take. So if we see a rejection of the key level, then we are okay. So now we are going to sell. We are seeing that the price has returned back to our entry level for a sell, and gave us a high volume move. You can see the high volume move price did to reject there while we were still talking. So price used a high volume move to come back into the sell zone. Okay, now with this move, we now know that this level, whether it breaks or not, we are going to make bigger profit than before. Okay, so as far as price continues to make this kind of move, okay, is giving us opportunity to make more profit, because the more entries we have, the more profit we can make. So while we are positioned for our next entry, we are taking the main entry, which is our sell. We are also going to look at buying again when price gets to 3314.61. So let's look at that. We took an entry at 3313.17. So we'll take a buy at 3314.17 because we have to try to target the current price. So 3314.17, we'll take a buy there. So let's get ready. 3314.17. We see that the price is playing around this zone. So it is back there. You can see that. So the reason why we have to keep watch is so that we don't miss the opportunity to increase our profit potential. The more entries we take, the more our profit potential increases. So now we are looking at taking our sell again at 3313.17. So we watch and see where price settles so that we know when to go back to the chart. You can see that price is now becoming volatile at this point. okay, because now price is trying to choose. You remember, all these moves have to happen within the first 15 minutes, which is the current candle have to make that decision. So as price is approaching the end of the time frame of the candle, it will start becoming volatile towards the ending of the life of that candle. So right now we can go back to the chart because we see that price has moved, okay, back into the buy area, and we've got our buy entry already in place. So if price continues to move in the buy area, we will have less tension with the sell positions. So we'll now be watching at again, targeting price reaching 3317, okay, on the life of this current candle. Because once this candle dies out, that's by 5:15 p.m., we will now be seeing the potential for the formation of our IPL, which will be for a sell. So that potential is what we are looking forward to. In order for us to take the entry on that potential, we have to have exited this entry in profit. So we have 5 minutes now to take our next entry decision. So we'll be taking our entry again at 3313. Let's look at that now. We have to come a bit higher. Let's look at our highest price here is 3314.6, 3314.78. So our next entry will be at 3313.78. Want to equate with this highest price because the initial entry was a rush down entry. So we came in a bit late while we had the opportunity to have come in earlier. So this time we are going to come in earlier. If price gets to 331413.78, so we'll have our sell entry, which is our main projection. However, because of the GWSCPE model, we already have a capital protection in place. So when price deviates from our main entry projection, instead of losing, we make profit. So this is why in the GWSCPE model, we don't automate exits. We don't automate exits. We exit manually. We trade actively. We are present with the market. We watch, observe, and decide. So we don't set auto exit. So one of the mistakes many traders make is the auto entry and auto exit plan, which informs the market on your personal trading plan, allowing the market to decide to obstruct your trading plan. So now we are not using auto exit, we are using manual exit. So manual exit allows us to time price and exit the position in profit by the difference from the price of our entry of the position in profit and the price of our entry on the position going against our entry projection. So that way we leverage the tight spread between the both entries, because the GWSCPE model, the ideal spread is 10 to 20 pips between both entries. So we are using the prices between the two entries to accumulate our positions, okay, which protects our capital. It is by accumulating positions we increase our profit potential, and then we also protect our capital. So right now, as we watch the market, we are relaxed, as you can see. Let's look at the, so far you see, the higher the price moves, the more our profit potential will become clear or clearer, okay? So the higher price moves right now, the clearer our profit potential will be, which means at the time we will be exiting, price will have moved higher than it currently is, okay, all the way up to 3318, which means our profit will become clearer, as you can see. So when that happens, we know we are going to exit this position so that we can leverage the new opportunity for entering. If we don't have the opportunities to enter, which is identifying entry opportunities as this, we will not be able to achieve our goal for the day. So to achieve our goal for the day, which is 10% of the loss recovered, okay, from 40% of the lost amount funded in our account, we will not be able to meet up the target. So we have to be entering and exiting manually based on the key levels our price approaches, okay, and reaches. So let's see, we are seeing a strong sign that our IPR might form anytime soon. So where is our sell entry level again? 3376 will be selling. So we see the current, this is a defined break. First of all, there is a clearly defined break now of the trend impulse projection arrow. You can see, so this is a projection arrow to the trend impulse circle limit, and clearly we are seeing a break has happened. So there's expected to be a gain of momentum. All right, which means that if the current opening candle or this new candle, okay, comes to retest our entry level, we are going to sell because we know it will not remain here. Okay, it will reject it so that we can increase our buy position. So the reason for selling next, when price is coming to our trend projection arrow, will be so that we can double our buy entry when price returns back to the buy entry price. Okay, knowing that with the break already happening here, there is higher potential for price to now go higher to get to retesting or even breaking the uh, correction impulses projection arrow. So this is where we are. We see ourselves at the current price. Okay, this is a real-time demonstration of the GWSCPE model, which, as we've said, can only result in profit. So the GWSCPE model roots out loss when the capital on ground exceeds, okay, $4,000. That is why we want to always have the right capital for trading with the GWSCPE model. So we want the capital to stay above $4,000. It allows the GWSCPE model to be used effectively. So lower capital can put the account on pressure and make it difficult to make consistent profit, just as we have mentioned. So we ask for our loss victims to fund their account